In this video, we will talk and show in the charts a very important perspective, mostly when you are looking at it from the day trading perspective, so that you realize that the vast majority of the days, the manipulation of price is very clear in order to deceive the average trader. But before we jump into the charts, we need to go deeper and understand the problem. The retail trader has been deceived at the beginning of the journey. And under the influence of that deceit, they are constantly trying to predict or detect with many variations where the trend is going to start or where the lowest price of a movement is going to be, therefore committing to it ideologically, which in turn makes them more susceptible to become emotional and distracted. Once the price does not what they imagine it was supposed to do. This is the ideology that was induced to you by the industry. The ideology of believing that as a retail trader, you know something. But in reality, you are in an environment where there's not real information, but only a chart with price moving in different fractions of time. And from there, anybody can create their own ideology of what the price is doing, what the price has done, and therefore what the price should do in the future and why. But we do not have real information, like the intentions of the banks, like the amount of money that is being traded at certain point, the amount of stops at a certain area, the amount of money that was injected at certain moment, or the reaction from every different big player. That is to say, the real what, the when, the why, the how much, and the until when regarding money decisions. We don't have it. The only thing that the retail trader has is the narratives that are more popular in the community, the tools based on past data that are the most talked about, the most popular patterns, and many other approaches invented based on subjective information and never based on real information, because none of us have access to that real information, but only the owners of the business, the banks. When you come to this business, hardly realize that the knowledge you are supposed to learn is prefabricated and induced by the same industry that attracted you, and that from that very first day that you are interested in this business, your behavior and thought process was conditioned to think in a way that was against your own benefit, and therefore prone to continue making the same mistakes. That is, to seek the same information and build concepts, hypotheses, and ideas under the same popular theories, which always gives the advantage to the business owners who have real information and access to large amounts of money. Part of this ideology that I refer to is the one where you believe that you need the past to have a sense of direction, and that the past always repeats itself, that there are form patterns or candles that are better than others, that decision or indecision has to do with the shape and size of random candles projected in the charts, that you can consistently detect and know what happened with narratives, what is happening with narratives, and what will happen with price with narratives in an organized and symmetrical way. This also makes you fall into the fallacy that you are learning something by memorizing ideas and that there is hidden language you need to learn. When in reality, it is only the opinions of the people that you are accepting and not real knowledge. And many other things that we will be discussing in this channel that leads the individual who desperately wants to succeed in this business to stay trapped and conditioned to create beliefs and expectations based on an illusion. Therefore, always more prompt to become emotional, distracted, and all those things that I'm pretty sure you are experiencing. Let me help you to be aware of an important fact about trading. When you are outside trading, the trading world, your life is based on your needs and wants. If you're hungry, you have favorite foods. If you like a person, you have your own preferences. What car you like, what clothes you wear, what shoes, what movies. All your life's decisions are based on what you want. In fact, I am certain that you came to trading because there are personal things that you want to accomplish, that the money and time from trading can help you obtain faster, isn't it? But this is a problem because all these habits of self-pleasure and self-satisfaction will become an obstacle when trading, because something very simple. This is not your business. The price does not move because you say so. The price doesn't respect your ideas more than the ideas of others. The market doesn't like certain tools more than others. This is a business. This is not about taste, likes, feelings, desires, personal goals. There is no such thing as correct or incorrect because its movement is random for the retail trader who lacks real information. And this business is about making money for the owners who utilize in their favor the access to real information and money. Therefore, you need to understand that they use this lack of awareness against you because instead of learning how to adapt to their business and how simple it is, you are trying to create something personal based on hundreds of different combinations and ideas of people trying to do the exact same inefficient approach based on their own opinions and ideas. This is something very basic and powerful at the same time. That is important that you understand. The only thing that as a retail trader you can control is the risk with which you will enter each position and how many times you will do it. Everything else is out of your control. It does not matter how long you have seen charts or how much technical analysis information you have accumulated or how many courses you have taken or any other sense of knowledge. The price and the factors that move it will continue to be with or without you. And you will never know for sure why they were as they were. When you hear about the intraday market, you will have tens and maybe even hundreds of strategies. It is also said that intraday trading is where the majority of people lose and where the longevity of the retail trader is minimal. Most people starting in trading will have small accounts and mostly will start trading from small time frames. But it is in the intraday movement where manipulation is more prone to happen. But the classical techniques and theories never take this into consideration. The individual action from the banks can change at any time what the theory indicator pattern seems to be saying. That is why the individual who is not aware of what we are exposing so far could be spending months and years studying technical analysis, reading candles and market history with backtesting and many other things without ever stop to think that the participation and individual action of the biggest banks and corporations is going to constantly change what they suppose needs to happen based on the conditioned ideology they accepted from the beginning. Banks and corporations will enter the market due to their own agendas and motivations, and not based on a theory of support and resistance or candle formations that you have so diligently learned so far. The price will not move because something you anticipated or based on a hypothesis that for you sounds more plausible. These unique participants, banks and corporations, are largely responsible for a trade with high probability to become a loser, that the price ends up going into the direction that the trend was originally going, but not before taking all the stops out of the market. They always have the advantage and the odds to their favor because they know where the money is and how much it is at stake. So it means that their direct interference can ruin even the most advanced and optimized trading systems based on past data eventually. Has it happened to you that your stop is taken out at a certain price to later return, being that the high or low of the day? Bad luck? Maybe, but how about if it happens more than once? Do you feel like the market is there against you? If the banks and corporations base their actions on real information, then it means that the decisions they make are based on the here and the now, due to what is being processed at that time and not necessarily by forms or movements of the past. They care about the what, where, and when, but not the why. While if you notice in the retail trading community, on forums, chats, and many trading websites, is constantly preached the why. The masses are always wondering why. There is always this need to know why. Why it went up, why it went down, why the price failed, why it continued to break levels, why it retraced a little, why there is no trend, why the market is so slow, etc., etc. And this vicious cycle continues and will continue if you don't escape from it, because we do not have the information to know, such as the big participants, who clearly know for sure what is being bought, sold, where is being bought or sold, and how much is being bought or sold. But never they are interested in why. They do not need to know why because they have real numerical information. You have to understand that in trading, they are not two exact events, since the factors behind will always be different. And although in form they might seem the same, it is only the facade, but not the processes behind it. Or at least we won't be able to know for sure. So it means that instead of predicting or wanting to guess what the price is going to do, or fill your mind with shapes and figures and call it language, you can improve your results by adapting to the actions that the business owners take constantly to take you out of the trades. And that understanding those actions, it becomes more natural due to the repetition of their simple business model, which one of them is that they constantly accumulate to create a counterpart, hunt stops, shade prices, create false breaks, etc. When you understand their simple business, then you understand what they are looking for and need, so that you can train yourself to be able to wait, adapt, and react to that model that has always been there, instead of trying to create something new or reinvent a business. But in order to achieve this, you must know how to see the details from another perspective. And one way to achieve this is by eliminating popular theories and tools and every narrative that you have heard so far, to start observing this, what I'm about to share in the charts.
I am going to show you this Euro US dollar in 15 minutes. This can be done in any financial instrument or currency, but I'm using this one for the example right now. I am separating each day with these squares in red that you can see that what they're doing is marking the same time every single day. This is from 6 p.m. to 2 a.m. Eastern time every day. If we are talking about this being a business, an industry, then this business is going to have a repetitive behavior. And we need repeatability to be able to earn money, to profit from it. If a process was not repeated, it will be very difficult to be able to make money and create a profitable approach, like in any business. This schedule that you see in red is the same every day. We will observe it from April 11 to May 11, 2020. But you can go further than that if you want. Before going to the charts, I want you to observe this while I'm going day by day. Once you observe the squares, every day you're going to observe this, just at different directions. Because remember, we only have two directions, up or down. You can only sell or you can only buy. One day you're going to see that the price just goes up. It doesn't matter how it goes up or how it goes down, the price just moves to one direction. Then another day, the price is going to go up and then it's going to go down. And the opposite, the price goes down and then goes up. Then another day, this can extend and then go up, go down, and then go up again. The same thing on the opposite direction. First it goes down, then goes up, and then goes down. And what you are going to see is that pretty much this just extends longer. The same thing, but from different directions. Goes down, goes up, goes down again, then goes up. This can increase. My point is that once we get rid of forms, narratives, and theories, indicators, and a lot of different issues or ideas that you just bring to the chart just because you hear from others or because everybody talks about those tools or those theories or approaches or methods that you hear. That's why we're getting rid of them, not using them, but observe this natural process that you can observe every day. Here you can see that the price goes up and then the day ends. The next day the price goes up and then goes down. The next day the price just goes to the north. Then the price goes to the south. The next day goes to the south. Notice that this square, it's a 24-hour period, which will be one day. The next day you have the same exact time that we're going to show you right here. See, it starts from 6 p.m. Eastern time, 8 hours pass, and then ends at 2 a.m. in the morning, just before the Frankfurt session open. The price goes down, same information. The next day it starts from 6 p.m. and ends at 2 a.m. Eastern time. Price down and goes up. I want you to notice this. This day and this day are doing the exact same process. The price went down and then went up. The price went down and then went up. The price went down and then went up. The process itself has some characteristics that are repetitive, but those characteristics, once you go into depth, are going to realize that are not characteristics of form. They don't look alike. That's why if you notice, I am not even using candlestick formations or Japanese candlesticks, because I can switch this to bars, open, high, low, and close bars, and I have this exact same process. We continue, and then we can see the price goes up and then goes down. The price goes down and then goes up. Price goes down, then goes up. Goes up, ends the day, doesn't go to the south, but the next day goes down and then goes up. As you can see, this day and this day have the same characteristics, but not in a superficial characteristic. Because if I compare this to candlestick formations, obviously I can't, because I don't have Japanese candlestick formations to compare it to. And the forms are not the same. This day and this day look totally different. And that's exactly the problem, because when you have a subjective validation, you are not able to realize that the processes are the same, even that they look different. And your mind is looking for something that looks the same, but in reality are not the same thing, because you don't have real information. Here at least we have real information, which is this specific time. We continue. This day the price goes up. This day the price goes up and then goes down and then goes up, and then the price goes up. This day price goes down, up and down. Price goes down, price goes up, down, and then up. This day price goes down, up, and today the price going down. Obviously there's a connection. This is just to help you be aware that there's an important thing that you have to be aware of. No matter what candlestick formations, or if I'm using Japanese candlestick formations or volumetric charts or bar charts, this information is the same. And I'm going to go on a step further, and I'm going to show you how, even if I change a time frame, I go from 15 minutes to 60 minutes, the information I am basing this process from is the same. Remember, this is a 60-minute time frame. Every candle is 60 minutes. So the last candle is at 1 a.m. and ends at 2. And if you notice, when I put a 5-minute chart, I have the exact same information. It starts from 6 p.m. and ends at 1:55 a.m. This is a 5-minute chart. But the important thing is that that information, that box, if I measure it with this price, and this price is 1.0822, and the highest price is 1.0849. If I go to 5 minutes and I go to that same information, the highest price is 1.0850, and the price below, or the lowest price from that area or that box, is 1.0822, which is the same here, 1.0822. So what happens? We only have one price, and the price is the same to everybody and for everybody. No matter how the left side of the chart looks like, the information on the right side, which is price, is the same. So if the price is going down based on this information, it can only do two things in all time frames. It can go up and change, or can continue going down. Only two things can happen. Just as it happened here, the price went down, the price went up, down, and then up, the price went down and then up, which is the exact same thing when I was doing it in 15 minutes. The price goes up, down, up, down, up, down, up, because this process of movement, which is not a narrative. Remember, I'm not saying what happened, why it's happening. I'm not saying what's going to happen. I'm just looking at what is happening in the now. Because remember, something important. The future is based on the understanding that the future is a present. The past was a present that is in the past. So the future and the past are created by no other than the present. So it is very important that you understand why being able to have the skill to understand and observe processes that happen in the present, to be able to adapt to whatever direction the banks are going to put the money, is an important skill to be able to trade with them with the smallest risk and the highest return. Because people do it the opposite. People trade based on the information of the bigger time frames, and they try to find direction in the smaller time frames. But most of the time, in another video, you're going to understand that if you look from this perspective, if you're looking to find the highest point on the lowest point, most of the time you're going to be taken out. And because you're taken out, you're not going to be able to go with the direction that the banks finally put their money. So this is not by mistake. This is a process that if you're able to observe and understand that it's the same process in any time frame, it's going to give you that edge that everybody's talking about. But it's not a holy grail. It's not a formula. It's just a way to observe things that are always there, with or without you. And by observing them, understanding how you can approach them if you change your mindset. So what you can do is from 6 p.m. to 2 a.m. you can go back to any instrument, any currency, and you can go further back, and you're going to realize that that process is there, as I showed you at the beginning.
What I showed you is not a strategy, but an observation. It was not intended to give you a recipe, but to raise awareness. In future videos, I will be talking more in depth of this understanding that I have acquired in the last 12 years, that started by being able to understand this business from the inside. I will be sharing with you more and more perspectives so you understand why following principles and not searching for recipes will allow you to think differently and be more flexible and adaptable to the real business model where you were attracted. There's no holy grail, there's no specific formula, but there are principles that apply to everybody. And when an individual understands those principles, he or she will be able to develop simple and personal rules that allow him or her to have a personal inner serenity, to be able to trade exactly the same things over and over again, and therefore stop having a subjective conflict in their heads when trading. Hope you are doing well in these times, and if you have any questions or comments, leave it here below. Don't forget to subscribe for more videos with different perspectives so you understand the 4 principles that all methods, theories, and strategies have: price, time, probabilities, and manipulation. See you later.